हेलो एंड वेलकम। स्वागत है आप सभी का आवाज एंटरप्रेन्योर पर और ये खास एडिशन में आपके लिए लेकर आ रही हूँ इंडिया फिनटेक फोरम के एनुअल कॉन्क्लेव इफ्टा 2024 से। इस साल इफ्टा में 2000 से ज्यादा स्टार्टअप्स ने भाग लिया। इफ्टा की खास पेशकश फिनटेक ओलंपियाड में 2000 कॉलेजेस के 40,000 स्टूडेंट्स ने पार्टिसिपेट भी किया। इस फोरम में चर्चा हुई फिनटेक में बढ़ती एआई की भूमिका से लेकर 2025 में आने वाले इनोवेशंस, फिनटेक के फ्यूचर और खास तौर से इस क्षेत्र में होने वाले निवेश पर। पिछले साल जब हमारी मुलाकात इफ्टा में हुई थी, चर्चा की शुरुआत इसी मुद्दे पर हुई थी कि क्या भारत में एक फंडिंग विंटर चल रहा है एंड व्हेन डू वी सी दैट एंड, बिकॉज funding in fintech across the ecosystem had dropped substantially. Even now, things haven't changed. From the peak of 21, we're still down to 60%, by 60% rather. And I was just comparing data. So 2021, $8.4 billion, and this is money that came into fintech. But in 23, it was $2 billion. And in 24, since we've got a couple of more days for December to end, so far it's only $3 billion. So not much has changed. Sanjay, let me kick this off with you. What's happening? Why has funding slowed down? पैसे की कमी तो नहीं है, लेकिन क्या choices की कमी है या innovation की कमी है?
Sector-wise, if you look blockchain, it has changed. If you look at crypto, it is different. It has grown. Just taking an example of Bitcoin, it has grown like anything. So asset has changed. So we have to think of fintech not just locally. Let's say Plate network. PLAID, Plane Network.
Yes.
It has grown. Stripe, it has grown. So globally, you have to take the bets, not locally. And when you invest, I have invested in companies like Conditix. It has grown like anything.
Talk about that right opportunity. Are you getting enough opportunities at this point in time, Mr. Chacha? क्या वो है या फिर अभी भी थोड़ा सा ठंडा है? Because that's what we started the discussion with last time. Market थोड़ा गर्म हो रहा है कि नहीं?
I think we are at the end of a sort of a maturing of a cycle. So you're seeing a change of guard in every sector. For every Byju's that stumbles, there is a physics wala or an eruditus. For a Dunzo that stumbles, there is a Zepto. So there's a Darwinian cycle going through, and the larger VCs are waiting with large checkbooks to back the winners who will emerge, right? So we are in the consolidation phase. In the early stage, it's interesting. We are seeing either some people who have not woken up and still trying to create some leaders who have, some ventures which have already become successful and dominant. So those ideas are kind of done and dusted. Or they're experimenting with AI. And I must say that the regulatory environment has not been conducive to fintech creation, right? I'll say it up front. As a result, there has been a chilling effect as far as new ventures are being created in fintech. Of course, these guardrails are important, but I think we need more clarification as well on an ongoing basis. Right now, the way the regulations they flow, we can understand in their wisdom they are releasing these circulars. But very often they come as a surprise, right? Because sometimes there is no regulation and some founders will go and build a product or a service. And later on we realize that, okay, this may or may not have been in spirit or something. So I think there is no rule book in general. So given how regulated the sector is, I think there needs to be more communication from the regulator in terms of what can be built, what cannot be built. And yes, they are doing outreaches, they are meeting with founders, but I think more needs to happen. Because when we look at various companies, sometimes we are also worried whether this will be regulatory kosher or not. And when you try to explain that to a founder, they say there is no regulation which says that. So that is a third factor that most investors and founders are not talking about. But this is a reality. It is a reality of any maturing ecosystem. We are seeing it in US also. The US Fed is also waking up and bringing about some changes. So globally, we are seeing as the digital money becomes pervasive, the regulators are waking up and saying, okay, we need to address this carefully. So it's across the world spectrum.
What is your assessment, Varun, as to what is happening in the ecosystem at this point in time?
Yeah, look, I think, I mean, the new buzzword since the beginning of this year was fintech is dead. Or at least that was a question being posed very often globally, not just in India, is fintech dead? And some of the numbers also you quoted can point towards that kind of a thing. But what we need to all understand and appreciate in this room is that 2021 and 2020 was in no way a baseline for any form of venture funding anywhere in the world, right? There's a normalized cycle, part of the cycle. And I think if you compare the numbers right now, it's probably closer to what we saw in 2018, 19, and which seems to be a more healthy, sustainable rate, right? So I think the funding has normalized. Funding has become a lot more skewed, wherein in 2021, in fintech, particularly, but even in other sectors, you just saw the funnel for venture funding getting super wide. There's a lot of new money flowing in. Suddenly in the middle of COVID, people realized that we can do a deal over Zoom, sitting in different time zones, 15 hours away, and cutting multiple checks across, right? Y Combinator went crazy just deploying money, right? And now they've pulled back on that. Similarly, on the founder side as well, when you see that money being available, there were so many people who kind of took the plunge. Consequently, a lot of funding happened, right? The demand-supply curves have moved up. But if you look at the quality of the funnel, that did not fundamentally change, right? There were parts of it that improved, but not to the quantum of the numbers that we saw in terms of funding. So what we're seeing right now is actually more of a calibration. I mean, who's to say what is normal, what's not? But a calibration that seems closer to normality and closer to what's palatable, where we're seeing a healthy side of, on both sides of the equation, both in terms of funding that's being available, as well as founders who are starting up. Right now, the founder quality is probably at an all-time high. What we're seeing, far fewer deals in the market right now, but it's people who with decades of experience, who deeply thought through problem statements, want to build multi-generational companies who are really taking the plunge to start off, because funding is not that readily available. Money is not that cheap, right? So I think that scarcity in funding actually begets better founding quality and better deal coming out in this vintage. On the funding side, we're seeing some kind of a skew where we're seeing a flight to quality. People are a lot more cautious. People are waiting, taking their time. Nobody is in a hurry to do deals over a weekend. And people actually want to talk about business and how do we build long-lasting companies, which is healthy for the ecosystem.
मेघा, क्या इसी तरह की conversations फिर आपकी भी investing companies के साथ हो रही है? Of course, everyone needs to be in for the longer game, but are they addressing and checking all the right tick boxes like the regulator also wants them to?
So I think absolutely yes, right? And one of the things that now founders have also started thinking on, specifically with what is going on in financial services from a regulatory standpoint, is that from the day one when you're designing your systems and you're designing your architecture, how much are you trying to ensure that it's in line with all the requirements that the regulator has? Because what has happened of late, specifically in the last 1 year, is that regulator has become very, very active in the ecosystem. And so has, the responses from the ecosystem. So it's become a situation where you have to, or the founders from day one have to think about ensuring that your systems, your internal architectures are built in such form that they withstand the test which might come through. And at the same time, the traditional financial services institution, which were not adopting to technology as much, are being forced to adopt technology, because a lot of guidelines which are coming in are going to be solved through technology only. So if you want to make your systems far more stronger, you will have to adopt cybersecurity startups, you will have to look at fraud startups, and you will have to adopt those technologies which might not be a priority so far, but now you're being pushed to take it up as a priority, right? So that is something which will enable the growth of fintech in that segment, but at the same time they need to ensure that you have your regulation in place such that you don't fall on the wrong side of it.
When you spoke of Coin DCX, now, Coin DCX was a very active player in the crypto market in India. And of course, we've seen how the regulator came down on most other companies. I think it was yesterday when we heard the statement that, crypto and perhaps we need to look, as a regulator, you need to be far more democratic and think of regulations in that context. And then, of course, I saw there was a mention of cryptocurrency, and then there was a mention of online gaming, and Delta Corp stocks ran up. But unfortunately, we don't have a crypto stock listed, so we don't really know. But where are these companies that you've made 100 crores on headed with the kind of regulation action that we've seen? And of course, when globally the market has evolved so much, so which side should they be on? Do they chase the customer who's keen on it, or do they stick to the guidelines that the RBI or the regulator poses?
No, first is customer. You focus on customer. Then comes across RBI. RBI is less important. If we are doing global play, if we are doing India play, it is very important. But if you are a fintech and you want to go global, you will adopt global standard.
But Megha, I remember every time we've had a conversation, and when fintech kicked off, we spoke of disruption, how banking will be disrupted, how broking will be disrupted. Nowadays, the conversation is something different. Now you're talking about partnerships, a fintech who wants to collaborate with a bank. I was speaking to somebody in the audience a little while ago, and they said, we are working with a lot of brokers, a lot of banks, and we're developing products for them. Is that the way to go forward for this industry to thrive? Because the banks will ensure that you as a partner are following all the so-called, are within the lines and not coloring outside the lines.
So I think that's where the industry is headed as of now, right? A lot of fintechs that are building towards collaborative nature, and the technology is something that can be adopted by the financial services institution, and that's the way they are disrupting certain segments, because they are offering, or they're making the existing financial services institution more agile in terms of adopting and launching newer products. Having said that, a lot of these fintechs from a growth standpoint, the reason why they are headed there is because like you rightly said, the financial services institution is going to ensure that you're right there, right, or all your systems and processes are under check. Additionally, I think over time, over the last 3-4 years, people have realized that digital is not the only way, and phygital is what is growing, right? And founders have realized that the way forward has to be a distribution plus technology. So in a country as vast as India, where you have a lot of tier 3, tier 4 towns, and across segments, whether we talk about mutual fund AUM, you talk about the number of users who insurance penetration or penetrated with insurance, the number of users who are penetrated from a banking standpoint, we're anywhere 3 to 4x lower than what it is globally, right? So there's enough and more headroom from a penetration standpoint. And even when data has reached its capacity in terms of reaching everyone, the services are not getting consumed completely digitally. That's where, the fintechs have also realized that there is a need for a distribution partner who can ensure that the product or service that you're launching or you're thinking about disrupting can be distributed to that kind of masses. And that realization is helping, these fintechs to come out and say, let's actually collaborate. So it becomes a win-win on both sides. You get the distribution advantage that a bank or a financial service institution gets on table, and you get the advantage of being agile with the fintech developing that product and technology from a scalability standpoint.
What kind of change, Mr. Chachra, would you see coming into the ecosystem? Of course, we think of the fact that if you want to build, like Sanjay said, build for the world, but the fact is, if you're based out of India, you have to build for the Indian audience as well. So what are the kind of innovations, irrespective of the fact, regulation, aggressive regulation or not, what are you seeing happening in the market?
So I think I can confirm that banks over the last few years have become very receptive to working with startups. They've understood where their lacunae are. And so we are also seeing, as Mecca was mentioning, startups are working with banks for distribution. So I'll give you, some things to think about. Generally, if you see technology adoption starts with consumer behavior. Consumers will adopt something. Then the business side will come. Like you had Hotmail, then you have Outlook, and then all the other email exchange programs that came. Even with AI, we started first with OpenAI, and then you'll have enterprise AI, right? Similarly, if you see, UPI was first adopted by consumers, right? So PhonePe, Google Pay, and so on. Where is that equivalent for small businesses, right? If I'm a kirana owner, when I pay something personally, I can use UPI. But there is nothing which is created for businesses to pay. It's not that the government is saying you can't do it, right? So those kind of opportunities remain, and those you can actually partner with a bank or launch an app or whatever it is. Similarly, if you see banking for small businesses, that's an area that we like to focus on, retail area. Small business experience is exactly as a consumer banking experience because it's built off the same stack, right? But as a small business owner, my needs are very different. I may need to have a cash flow statement every day. Why can't I do that? I may want to see alerts in my bank account which are telling me you have some e-natch payments or this and that going on. That's not happening, right? So there is an opportunity to upgrade, for example, bank accounts. At least small, corporate banking accounts, consumer accounts. So all of this upgrade cycle is not going to happen by banks. Right? Banks have literally very little R&D budget. They have basically catch-up budget. All the R&D in this country has either been done inside, some NPCI or something, or startups. We are the outsourced R&D departments of the banks, right? So they will work with us. So those are all the options. Ultimately, what we see is that people starting to build vertical software. Specific industries have different working capital cycles, right? So you're going to see, CFO suites. You're going to see banks now starting to, they started to do that with our portfolio companies. If you're in the, business banking business, you can't just approach another client and say, take my current account. Why? You have to offer something that nobody else is offering to that client. So we're starting to see those kind of collaboration happening. So I would say next few years, software starts to eat banking. That becomes very interesting.
Varun, what are the opportunities that Kona is witnessing at this point in time? What are you keen to bet on?
Yeah. So, Harsha, so one interesting thing is that, at Kona, we also have a global vantage point, right? As a fund, we invest across in Africa, in Latin America, MENA, Southeast Asia, and India.
Yes.
So, right, so we get to see some interesting trends that are playing out across globally. I think one of the, couple of the major shifts that we're observing globally where India could be potentially a very big beneficiary. One is the entire China plus one strategy, right? We're seeing a massive displacement in global trade flows that have happened, right? We've seen all the investment that's gone into in India and building out manufacturing capacity, etc. So we're very actively tracking businesses, fintechs that are building for this cross-border commerce piece, right? And I say commerce, not payments or not credit, because I think it's an integrated problem. Yes. At the end of the day, it's not a point solution that people are looking for. If you speak to any small exporters, UP, Tamil Nadu, wherever, they have to run around so much to get a simple transaction done. The job or the purpose of that small business owner is to find revenue points, manufacture, and sell. Everything else should be outsourced. Everything else should be done with the click of a button, which is not happening right now, right? Whether it's your letters of credit, whether it's your trade finance, whether it's your bill of lading, whether it's your logistics, whether it's your payments, just to collect money, there's so much leakage that happens, right? So people need to solve for these problems in a more integrated way. So we've invested in a company on the education side called Zinc that's building out of Singapore, Bangalore and Abu Dhabi that is looking at the cross-border education problem. So like looking at the entire ecosystem of pain points and trying to build around that. The other broader theme that we're tracking is the intersection of climate tech and fintech, because as globally more and more importance is placed on the problem of sustainability and global climate problems, we need different solutions and different pools of risk capital to fund for it at this stage. So we're tracking that theme very, very actively, particularly in India. We've invested in a company called Turno that solves for the electric vehicle ecosystem, starting off with the commercial vehicle side. And we're fundamentally just trying to assess risk, right? It could be in the form of credit, the product could be in the form of credit, insurance, what have you. And the last theme that we're tracking out of India on the fintech side is software more broadly, but fraud, generative AI applications more specifically. Because again, the point is that as real-time payment systems, the technology stack across markets like India and Brazil have evolved very differently from the developed world.
Right.
We need to start building indigenous solutions.
Okay.
Right? Like the entire money mule problem. Nobody in the US is thinking on how to solve that, right? We need to solve for that. So we invested in a company called Bureau.id that is solving for this across emerging markets building out of India. And we are looking to partner with more such founders as well.
Mehika, any such ideas that are coming to your thought, to your mind at this point in time that IFL may have bet on that could give you 10x, 20x?
So I think on similar lines, we're looking at cybersecurity being a big area, right? So fraud, cybersecurity, and regulation technology, where India is, just scratching the surface as of now, and there are some startups that have come up, but there's a lot of work in a lot of aspects that needs to be done. So that's an area of interest for us, where we've been evaluating startups in that space. And the second one is generative AI with specific use cases in financial services. So generative AI as such, only in certain areas generative AI is picking up. So you've customer service where generative AI is picking up. We have product technology and marketing. These are broad areas where generative AI has now started picking up. And again, where the money would be made in generative AI is those generative AI models that can deliver an efficiency rate of about an 85-90%. See, all existing institutions, whoever have adopted technology, have some kind of a machine learning model where the efficiency rates are already in the range of 65-70%. So for any of your processes to be migrated to a generative AI model, you need to have an 85-90% efficiency delivered by those models. And the companies or the startups that have or are delivering that kind of efficiency rate is where the money is to be made. So that's the second aspect that we're looking at. And thirdly, then there's a lot of underpenetration in terms of lending still, right? While you rightly said lending is the area for monetization, there's still a lot of scope in terms of, ensuring that there is credit that goes to MSMEs of India to get them to the growth trajectory back. But what kind of products and how can they be made more like a semi-secured product needs to be seen. And there are startups coming out with a lot of innovative ideas there. And that's another aspect that we're looking at.
Okay, I see we've run out of time, but thank you very much. It's been quite interesting as always speaking to all of you. Thank you very much. And thank you very much. It's been a great audience.